obviously it's a huge momentum behind renewables, whether it's energy or other solutions. So if you take the typical investor who maybe tunes into this podcast, and that investor is trying to decide which companies he wants to put in his basket, obviously there are some sectors right now killing it big time, and there's a lot of different projects. Do you think this is the case of, running the numbers and seeing that it's actually profitable in the near term versus some projects who either do carbon capture or a lot of different high-tech solutions where it's not really understandable how they're going to make money today, but hopefully they will figure it out in a couple of years? How do you sort of see the environment in general, and what can a typical investor use as frameworks or methods to dive into different companies?
So one of the lessons learned from my Flex LNG days was that, I told my business partner for CNG Fuels, Baden, our CFO, that I would never list the company again. And of course, I had to eat my words there because we have listed again. The reason I said that was early stage companies that have a concept, an idea, that are still years away from having tangible infrastructure built or tangible cash flows, etc., is not something I ever wanted to have listed again. Because Flex LNG, of course, were a concept, it took us years to get something built, etc. And in that interim, you're quite vulnerable, because if the capital market's shut, then the first things that investors run away from is the stuff that has no cash flow and will produce something attractive in the future. So we took a different tack this time, which was, let's keep our head below the radar. Let's build a concept. Let's build a company. Let's build something that is real, tangible, has tangible cash flow, tangible revenue, etc. And then, if we were ever going to list, we were going to list something that was mature. Now we are now a 9.5-year-old company. So, I shouldn't be giving advice to personal investors out there, but at least one of the lessons I've learned, and which is important to me, is being a public company is of course about delivering, all right? And I get that, all right? Yeah, you need to deliver updates, etc. But it's also about not having 6 years until something will be realized and something great will happen, may or may not happen, because so much can happen in that 6 years that is at least for me, sure, you can have certain themes that are very popular and therefore shoot up in value, but I don't necessarily think they're shooting up in value because there is substance behind it. I think there are just themes that investors get hooked onto, like AI today, all right? The AI craze that's currently going on is a bit like .com, and a bit like some of the green companies that did list 2 years ago, 3 years ago, 4 years ago, are today struggling because I believe they've been in the public, they've been a public company when they've been going through a lot of their early growth pains. We are through those growth pains. Now we are cash flow positive, and we continue to have strong growth ahead. So I would at least look at, when you are, if you're looking to invest in the green space or in energy transition, I would want to look for something that has substance and near-term substance, and not just something that is probably 3 or 5 or whoever knows how many years away it may or may not be, because so much can happen in that time.